Welcome to your crypto market update for the week of September 26th of 2022. In this video, we're going to cover an extraordinary amount of valuable information going into the end of September. We're also going to be giving away $50 in Bitcoin. If you watch towards the end of this video, I'm going to ask a very specific question and I want you to answer in the comment section below. Now, if you get value during the course of this video, would greatly appreciate you supporting the channel by simply tickling the like button, sharing it with someone that you think would also get value, and hitting subscribe if you think we deserve it. Now, what are we going to be covering today is the fundamentals, on-chain metrics, technicals, and my overall thoughts and summary of what is going on. Now, realize this is not financial advice. You should know that by now, all right? So as far as the fundamentals go, we're still very hawkish with the Fed by their recent rate hike of 75 basis points. Inflation did drop by 0.2%, which is now 8.3%, which is extraordinarily high. The Fed has said they're going to continue to raise rates until that number is 2%. And I will say that that is likely to happen sooner than people think. People think, oh my God, we need to have a quantum decrease in that we need to have an 80% drop in inflation, which is true, but what you don't understand is it's year over year growth. So what they're actually comparing this to is last year during the same month. So as we start to head into the next 6 months, we had pretty high inflation about, in the last really 6 months, we've had extremely high inflation. So we're going to be comparing that time to 6 months in the future, which is likely to bring down that inflation because we're comparing it to already high inflation. So it's likely to happen quicker than people think. And I do believe that the Fed is probably going to pivot quicker than people actually believe. So we're also coming up on midterm elections, which is in November. Which is really, really crucial, at least for politics here in the United States. It does have a decent impact on markets as well. We'll also be watching the outcomes of really key macro events, which we're going to cover here in a second, going into the early stages of October. And also, Bitcoin hash rate has hit another all-time high, which shows immense conviction in the asset class, even after it being down 75% in this year. As far as what we're battling is still that kind of seesaw effect between unemployment and inflation. Now that we have really low unemployment historically, you can see right here, and we're still at only 3.7%, which is extremely low. That allows the Fed to hike rates, to continue to hike rates, and maybe even at a faster rate because we have low unemployment. If we had really high unemployment, that's bad for the United States. So the Fed would be less incentivized to use quantitative tightening to try to slow down the velocity of money, to try to bring down inflation because so many people are out of jobs. But now that so many people have jobs and employers are still hiring, the Fed is much more likely to continue hiking rates and continuing to try to slow down the money printer, even though they're addicted to it, which is technically negative for the markets. So this is something to really keep a pulse on, and we're going to be looking at this going into October. Some of those important dates that we're looking at is October 7th, which is the employment announcement. So we want to see, honestly, we do want to see unemployment come higher, because if we have a higher unemployment, yes, that means more people out of jobs. Typically, unemployment is a lagging indicator. So a lot of people say, oh, how can we be in a recession if unemployment's high? It's because it's a lagging indicator. It typically is one of the last things to go up while the markets are going down. So we're going to wait to see this. Hopefully the number gets higher, because again, that's going to stop the Fed from tightening, which is going to allow more people to borrow money, which allows more people to spend money, which allows more businesses to make more money, and typically markets to go up. So that would be positive if you believe that the market going up is a positive. I guess it depends. If you're a short seller, it doesn't really mean that that's a positive thing for you, at least. All right. CPI data is also coming in October, which is the 13th of October. So, last CPI event, we actually came down. We came down by 0.3%, but the market sold off so hard because everyone was believing that inflation, the CPI, was going to be under 8%. They were hoping for the really low 8%, if not in the high 7%, which we did not see. So it actually missed expectations. Although it did come down, it still did not hit expectations. So this is really, really key. We want to see this continue to drop because, again, the Fed has said that they're going to continue to raise rates until it comes down to 2%, which is going to help when we start to compare this to 6 months ago when we already had high inflation, and then also hopefully unemployment's a little bit higher, and CPI, hopefully it does start to come down, because that's going to stop the Fed from hiking so much. As far as the NASDAQ goes, massive announcement getting into crypto. The reason why we like to cover so much macro stuff is it has such an impact on speculative assets like cryptocurrencies. So all the people that only talk about fundamentals, that only talk about technicals, you're missing the overall picture. You have got to understand the macro, fundamentals, technicals, and on-chain. That's why we cover all these in these weekly announcements, because they are so important and crucial for you to understand if you have a desire to manage your own money. Okay. Obviously, this isn't financial advice. We just want to give you education so that you can understand what's going on and have some context. What's huge is not only did we see BlackRock partner with Coinbase, right, and start to launch institutional trading specifically for Bitcoin for their clients, but we've also seen Fidelity, which I'm not sure if you guys saw this. I actually announced this on Twitter. Fidelity and Citadel and Schwab partnered on an exchange, a cryptocurrency exchange together, and they have tens and tens of millions of clients all around the world, and tens and tens of trillions of dollars. So this is a really, really big deal. We're talking, combined, they have over $20 trillion under management and over 70 million clients. So it is a really big deal for those people to be partnering, not to mention one of the largest stock exchanges of all time. The NASDAQ is now launching custody services for crypto assets. So this is huge, guys. If you understand anything about investing, what you want to see is the fundamentals growing, and you want to see the technicals, aka the price, coming down, because that gives you an unbelievable opportunity. What's unfortunate is most people do the exact opposite of what they do. They buy the top, sell the bottom, they freak out, and this is really the only asset or thing that goes on sale when everyone freaks out and doesn't want the sale. That's just how financial markets are, right? If Target, Walmart, Best Buy has a massive sale, everyone's running in there on Black Friday to go buy everything. But guess what? When we have the same exact thing happen on investments, what is everyone doing? They're all sharding their pants and selling everything, which is really unfortunate, because that's why you typically want to look at what are the retail investors doing. Let's do the exact opposite of all those idiots, right? So start to think that way when you understand that markets are the collective market mind, and you start to look at, hey, what is everyone else doing? And if I just start to do the exact opposite of what everyone else is doing, I'm probably going to do decently well. The Bitcoin hash rate, like I mentioned, is at all-time highs. It just shows further conviction in Bitcoin as a fundamental long-term asset. For people to be going into mining, and the hash rate just is really the total hash rate of, which is pretty much the computing power of the Bitcoin network. So as more miners come onto the network, each miner costs thousands of dollars. You have to have a commercial facility. You have to engage in electrical contracts. It is not a small thing to do. It's not something you just go plug in your iPhone into a wall socket. It is a really big deal. So to see this number going up when we've had the fastest drop in Bitcoin since 2012, that is a really, really big deal. It shows fundamental conviction in this asset to continue to see this going up. And also, this is typically a leading indicator for Bitcoin going up in price as well. If you understand anything about the hash rate as indicator, we have covered that before, but that's typically what happens is when the hash rate goes up, we typically see Bitcoin's price follow in the next few months to come. On-chain metrics, a lot of things are pointing to us being at cycle lows, and that does not mean that we've actually bottomed, but a lot of things are actually showing that, such as the Bitcoin long-term holder net unrealized profit and loss. We actually are in a net unrealized loss right now. As you can see, we're in the red zone, which typically happens in the depths of the bear market or in really big capitulation events like we saw during the COVID crash. So we are definitely in the zone. It doesn't mean we're at the very bottom. We're in the zone of where we could potentially have a bottom. So it's just showing that, hey, we're a lot closer to the bottom than we are to the top. Same thing with Ethereum. I love the Z-score. It really just shows its fair value. When the Z-score, which is this blue line right here, is into the green, that small green rectangle at the bottom, that shows that it's really undervalued relative to its market value. So typically you see Ethereum kind of play in that route. I mean, we haven't had many bear markets in Ethereum because it's somewhat new, launching in 2015, 2016. We had obviously a longer bear market in 2018 through, really early 2020 for Ethereum, and it was kind of playing in that zone the entire time. We'll see if that happens once again. What is huge is the issuance rate of Ethereum has dropped. As you probably saw in my Ethereum 2.0 video, the issuance rate of Ethereum has dropped by over 10,000 Ethereum a day, which is a really, really big deal, as a huge supply shock to Ethereum, which I think is going to have a huge impact on price over the long haul. So I wouldn't be surprised if it doesn't hang in the Z-score at the very bottom of the Z-score for very long. Also, the realized price for Bitcoin is just showing that we are below the realized price, which is sitting at 21,300. Typically, when we're below the realized price, it's been a really, really great time to accumulate Bitcoin, and we are definitely below that because Bitcoin is sitting actually below 19,000 right now. Usually when you come below this zone, you have anywhere between 3 and 6 to 9 months to accumulate Bitcoin. So anywhere in this 3 to 9 month mark, which we've been below it for several months now, you typically is one of the best times to accumulate Bitcoin. We're also seeing the long-term holder net position change and just the regular net position change for hodlers, which is people that hold Bitcoin over 180 days. We're seeing them starting to accumulate as well, which just shows conviction in the asset long term. Although we're not seeing a massive accumulation right now, we believe it's just because of the looming macro environment and everyone's trying to figure out, hey, what's going on? What's the Fed doing? What's going on with the wars overseas, the energy crisis? There's a lot of stuff going on, right? So I think people are starting to be a little bit cautious to go really hard into speculative assets like Bitcoin and other cryptocurrencies. So I think we're starting to see that reflected in on-chain metrics like that one. On the technical side, a lot of things to cover. Some big things happening. I mean, the dollar has just gone parabolic, which makes it extremely strong. A lot of people ask, hey man, how can the dollar be going up in value when inflation is so high? Because what we're looking at is the dollar relative to other fiat currencies. So if you look at the DXY, which is the dollar index, it has just been parabolic, which makes it very hard for other assets to gain value. So if you watch markets and you actually watch the dollar go up in value, I can almost guarantee you that stocks and crypto assets are then going to be selling off. And that's what's been happening for over a year now. The dollar has just been going parabolic. So we want to see the dollar start to chill out. I want to show you some other charts as well, such as the S&P 500. We talked about this very in depth about, hey, if Bitcoin or if the S&P comes up and taps this top trend line here for a third time this year, that trend line was also at the 200-day moving average. If we get a rejection off the 200-day moving average, which is perfectly at resistance, we are likely in for a massive sell-off, which we did. We saw a massive sell-off, and we are now sitting at the very bottoms of the 2022 lows. So my expectation, I actually was in a short position. I was shorting the S&P mini futures. It was like a $200,000 contract size, and then was also an SQQQ, which is a 3x inverse of the QQQ, which is just another index in the stock market. And I actually closed them when we reached the bottom of this on Friday. The reason is because we could see a bounce. We are very oversold. If you were to look at the RSI and a few other indicators, I think it's wise to expect a bounce at this level, but we will see what happens as the market opens up today. And once we clearly break this, I think everyone has their eyes on the COVID highs, which is sitting at 339. So that's another 6.5% drop after we do break this local bottom here, which is the previous 2022 lows. As far as tech stocks go, we did have a double top and an M pattern, which then had a really hard rejection and sold off quite nicely. Tech has just been getting destroyed this year. And the reason why we cover stocks so much is because Bitcoin and crypto are so correlated with stocks now, it's not even funny. I mean, the correlation is almost tick for tick. So we haven't seen that historically, but the course of this year has been insane. Actually, even starting at October of last year, it's been extremely close as far as correlation goes. So we'll see if we see a decoupling. I do think we do see that at some point in time, but I don't think it's this year. Potentially, we'll see if we see it next year. Bitcoin is forming a descending triangle. BNB is also doing the same thing, so which is Binance Coin. Usually we see BNB kind of lead the market because we don't know why, to be honest. We've got a few theories in our head, but usually we see Binance Coin actually be the leading indicator for what the rest of the crypto market does, and BNB is also doing the same thing that Bitcoin is doing. So we'll see if we break lower. We are having a little bit of bullish divergence, which we have not seen for a very long time in Bitcoin, where we're seeing strength of Bitcoin going up, but price going down. We are, potentially seeing an inverse cup and handle pattern right now, which is definitely a very bearish thing. So we're kind of at a point where, hey, if the dollar keeps going up and stocks, fall to new lows, I think it's pretty likely that Bitcoin continues with it, which I'll give you my prediction here in a second at the summary. Also, ETH BTC looks like we're forming a head and shoulders pattern. Would not be surprised if we see ETH sell off again. ETH is not even close to its low. I think it's sitting at 1,300 right now, and its low was all the way down at $900 into the 800 region, I actually believe. So I think ETH has a decent move lower, and we will see if we continue to see, ETH has been dominating Bitcoin this year, but I do believe that, with this pattern and also just considering the rest of the market, I would not be surprised if we see ETH sell off even more than Bitcoin the remainder of this year. Another huge thing we pointed out on Twitter, we talked about this in our private communities for a while. Hey, XRP is in an 18-month trend, and now we are officially breaking the trend. So even before we broke the trend, we said, hey, look at this bullish divergence. The RSI is moving quite nicely up and to the right, and meanwhile price has not broken, and it's actually been in a really strong accumulation zone. We actually also talked about volume greatly increasing as well, and then also the huge news that is the reason why I was really focused on XRP over the past 2 weeks is the SEC and Ripple both came together and filed a motion to get the case done earlier. So actually the case should be coming to a close by the end of the year, mid to late December. So a lot of people are starting to accumulate XRP, and rightfully so, because this has been a huge cloud over XRP and Ripple, and it does look like Ripple is going to win the case. They've also been in talks with the CFTC, which is the commodities division as well, and it's looking like the CFTC is going to be able to actually regulate Ripple and XRP, not the SEC, which would be very bullish because they are a little bit more lenient and a little bit less hawkish and bearish on crypto assets. So that would be huge for XRP. It does look like they're sitting pretty, and I would not be surprised if we see a move at least up to the high 70s for XRP over the course of the end of the year, even with markets coming down. Although, if markets do sell off really hard, it's going to hold XRP down, but I wouldn't be surprised if we do see XRP continue higher because of that news, the strength in the market, volume increasing, breaking the trend, all of that happening at one time. QNT is another coin that I like, and I actually want to bring up the question now to win $50 in Bitcoin is XRP is one of the coins that is in ISO 222. I've covered this on another video. We're going to cover this more in depth, but there's multiple coins that are in this ISO 222, which is a new language that the banks are starting to use starting in 2023. Actually, November 2023 is one of the big launch dates. There's several milestones, but it's essentially a massive shift from the SWIFT system over to this new language that all the banks are going to use, and they have already approved multiple blockchains, which is Stellar, Lumens, and Ripple. Okay, there's also a few other coins that are going to be considered, such as Quant, such as Algorand, such as Cardano, such as XDC, and I believe there's HBAR And I think that is it right there. So I want to know what your favorite coin is out of the ISO coins. Out of all the ones I just listed, are you a bigger fan of XRP, XLM, QNT, XDC? Let me know in the Algo, HBAR. Let me know in the comment section below, and tell me why too. I want to hear why. There's a lot of moonbaggers in crypto that really have no reasoning why they buy anything except for that someone else tweeted about them and they like the name. So please also, number one, let me know which of the ISO coins that you like. Number two, let me know why. And if I pick your comment, which I'm just going to pick really a random comment that follow the rules, I'm going to ask you to put your BTC address below the comment, and then I will pick you and send you $50 in Bitcoin. All right. So overall, again, we are still quite hawkish, and it does look like the markets are going to be quite bearish to end the year. My personal opinion is that I wouldn't be surprised if we see a big sell-off, we see unemployment come higher, we see inflation come down, and the Fed pivots actually earlier to mid next year, which is going to have, I think, a massive rally, at least in U.S. equities and in a lot of crypto assets, because we've been following U.S. equities so closely. And also what happens is, and we've seen this, right? Crypto and speculative assets kind of lead the trend, right? We saw crypto sell off way before we saw the stock market start to sell off. We really haven't seen, real estate capitulate yet. We've seen commodities capitulate, a lot of them so far. But the thing is, we usually see crypto assets lead the way, and I would not be surprised if we see crypto assets lead the way out of this. So a lot of people that are betting on, the doomsday for the next 10 years, I think the Fed is going to surprise people. That's my personal opinion. I do think that we definitely have more downside, and I think that's really great buying opportunities, potentially even aggressive short positions as well. But I do think that the Fed is going to surprise people because they said they weren't going to hike this year, and look what they've done. They've hiked everything into a recession, the entire world. So I would say that that's my overall view. Whether I'm right, wrong, who knows? But that's kind of my point of view, just so you know. I also want to end with a quote here in a second, but if we do see a sell-off, we are expecting Bitcoin down to like the 15K type of range in the mid-teens. And I think there's going to be huge opportunities to buy altcoins, which we are gearing up to do quite heavily in our hedge funds and also in our communities as well. So one of the quotes I want to leave with is by Robert Arnott, which is, "In investing, what is comfortable is rarely profitable." What you got to realize is, I understand when there's capitulation, when there's fear in the market, when you don't really know what's going on, you don't know what the future is, you don't know if what you're holding is the right thing, all that stuff, right? The most valuable thing you can do is learn and understand how everything fits together. So you need to have the context of what is going on in the macro, technicals, on-chain. That's why we put these videos together, and do your own research so that you have conviction in what you buy. Because especially in crypto, when you have 90% drawdowns, if you don't know why you're holding it, no shot that you hold it. And the thing is, if you're consistently buying and selling everything and you're never staying in positions, you're going to miss out, because the fact of the matter is no one is smarter than the market, okay? And no one knows when the bottom and the top is going to be. And a lot of the times it's wise to have your portfolio, your investment portfolio in assets, and you have a long-term position in your portfolio that you're not in and out of the market on, but you've got to have the conviction to do that. And if you're in speculative assets like crypto, especially before you have mass adoption with regulation coming in, you got to realize that, hey, what is comfortable is rarely profitable. If you want to have these 5, 10x, 100x gains that crypto offers, which is extremely rare in the history of the world, very rarely you ever get an opportunity like this where an asset class comes out of nowhere. If you want that type of opportunity, it's not going to be a comfortable ride. It's going to be a bumpy ride, especially going into regulation, especially with the asset class being under 1 trillion. It can be highly manipulated. But what you got to understand is this is the price that you pay to have really big upside as well. So if you can't take the heat, get out of the kitchen. I don't know why you're in the kitchen, but I hope you don't quit the kitchen just because you're too scared and you don't understand this quote. All right. If you get value from stuff like this, we have a community below that we share a lot of these details with, and positions that we're taking. We manage a portfolio. We talk about trading ideas, all those things. So we'd love to have you in the community. Again, there's a link in the description below this video. Anyways, thank you so much for watching, and I hope to see you here on this next video.